So welcome everyone. I was just telling Ken the story when I first spoke to him that he was actually on my wish list. His profile came up on LinkedIn, and then Chris Churchill was kind enough to introduce me to him because I wanted to have him speak. So I'm really excited that he's here tonight and that Dion's come along to have that conversation. Usually with our talks, they're pretty organic, and if you have questions, burning questions as we go along, I'm sure the speakers don't mind, to make the conversation much more interesting and so that everyone gets a takeaway. But anyway, I'm going to leave it to both of you to introduce yourselves, and thank you again for coming.
Thanks.
Ken, why don't you go first?
Okay. Hi, Ken Kruszka, founder, CEO of SnapCheck. A little background on me, I've been in FinTech for about 15 years, previously in the person-to-person international remittance space, and now tackling the same problems, but over in a business-to-business context where change is even slower and people are even more conservative. So it's a fun environment.
So Dion Lyle, I'm heading up a new business unit at Capgemini called FinTech, and basically I garnered the role because I've been in both FinTechs as well as large banks. I was with Citi Growth Ventures Innovation as well as First Data Ventures. And what we're going to talk today about is FinTech innovation in the B2B space. And I found an interesting quote from FinExtra. FinTech innovation in the B2B space has only just begun. How old do you think that quote is? Guess. B2B FinTech innovation.
Years.
Good guess. Anyone else?
A month.
A month is correct. You got it. That's 1 month ago. So trillions of dollars move in the B2B space. To Ken's point, banks are slow. They're, somebody used a metaphor the other day that I think is apt. If you picture an aircraft carrier going into the Panama Canal and attempting a U-turn, that's kind of what banks are stuck with right now. And that's kind of the issue that we want to address tonight with some discussion points and, of course, make this interactive and engage everyone in this. So, Ken, one of the first things that occurred to me, and I was in venture investing with both Citi and First Data, and I've worked a lot with corporate venture and a little bit with VCs. Consumer-facing fintechs in 2015 and for most of 2016 were kind of the buzzword. Everyone wanted to talk about it, besides the stupid unicorn thing. But do you think that focus has now shifted to B2B? Are you finding VCs receptive to that message?
I think that the situation hasn't changed much over, not even the past 2 years, but the past 10 years. Investors invest in what they know, right? So Silicon Valley is mostly driven by the people that have come out of the Valley culture, right? So either the hardware side or now more recently out of the Googles and the Facebooks. So you're still seeing a lot of consumer-oriented investing because that's what they know and that's what they're comfortable with. If you go into the VCs that previously were hitting enterprise, hitting business solutions, now they're gravitating now towards FinTech, and they're bringing those learnings from that previous experience here now into FinTech.
That makes sense. And kind of building on that, the consumer angle, I think, is interesting because I think a lot of that is the focus from millennials. Customers now want Apple-fication of everything. They want their bank apps to be as easy as Google or the iPhone. Now, are you finding in B2B applications that the same is true, that your customers, your partners, your consumers, your clients are looking for really easy, really sexy interface, really special kind of application?
Yeah, so what we're finding is, there's definitely, a bleeding over of, what I see in my personal life and wanting those same types of tools, even in the enterprise space, right? You have your cell phone and it can tell you if your servers are up or not, right? And they want that same level of anywhere, anytime access. But business is still business, right? So businesses aren't doing accounting on a cell phone. They're not doing it on a tablet, right? You're sitting at a desktop or at a laptop because you need a big screen. You have a lot of information there. It's more comfortable. So a lot of our business requirements are around, give me web, right? Web first. Mobile first is a consumer thing. Web first is business.
So I remember years ago I worked on a project where our ad was basically a CFO on a golf course approving a $50,000 wire transfer, which, although I approved the ad, I thought was a ridiculous concept. But it does beg the question, beyond actually doing accounting on a mobile, is there a requirement for mobile access? Do CFOs and other financial people want access to their bank websites and activities?
Well, they do want mobile access. Again, remember, in a business context, a lot of times you're dealing with double approvals, right? Someone is creating a transaction, someone else has to approve it. So the CFO, when he's traveling, when she is, in a meeting, if something needs to happen, want to be able to push a button. Yes, approve this transaction now, and that's going to happen through a mobile device. Want to be able to see your charts, your reports, nice pretty graphs, so you can see the cash flow today, right now, from wherever I am. If I'm, on the subway, on the train, commuting in, I want to be able to see that. But to get things done, right? So it's the consumer versus the doer, right? So to consume, it's mobile. To do, people are using laptops for that.
That's a good bifurcation. Now, consumer payments like Apple Pay, although everyone says it's failed, they're doing billions of dollars, but a lot of the consortiums have failed for a variety of reasons. But the main reason is consumers didn't want to change their behavior. Do you find the same to be with business customers? Are they stuck in the old way? Are they like, hey, it works fine, I'm not worried about changing it?
Yeah, they're stuck in old ways, and even in business, people are more conservative about change, right? Because you're not just dealing with your own credit card, you're dealing with the entire company's credit card, right? So if something goes wrong with those accounts, your job is on the line, right? It's not just losing, a few $1,000s for yourself, which is painful enough, but for you to be out of a job because you messed something up is a real big problem. And besides that, businesses have process. They have bureaucracy. They have ways that we've always done it in the past. And while most of us would say, well, throw out the old way of thinking, a lot of times that's a good thing to do. But also, you're dealing with back office processes, and it's not the core business. Right, so it's not what people need to change. And so if the less change and the more incremental and pragmatic you are, it's easier to drive them over the hump and get them into a new way of thinking. So you always have to remember that you're dealing with people and multiple people and getting all of that buy-in all the way through the chain.
I guess that's why I always thought the B2B would change faster than consumer, because if you could show an ROI, if you could show a business outcome, that would drive the change in behavior. But maybe it's not as pragmatic as that.
Well, I guess, two different issues, right? So one, there hasn't been a lot of focus on fixing the B2B problems until recently, per your earlier quote, right? So yeah, you do have the pure economic driver, right? If you can show a 50% efficiency gain, someone's going to listen to that. But then you have to worry about, okay, how much do I have to invest, right? It's not just buying the software. It's not just subscribing to the new service. I have to train the 15 people in my payables department on a new process. I need to communicate with all of my vendors, all of my suppliers. I have 1,000 different suppliers. I need to get them bought into a new way of doing things. And then I have to carry both processes through a migration until I'm finally over that hump. So it's a process to get that, I think.
When you talk about business, what is the size of the business are you guys talking about?
That's a great question. So actually the next question leads into that, which is, so I saw a lot of focus in 2016 on fintechs helping SMBs, the smaller businesses, on their working capital constraints. Mm-hmm. Do you believe fintechs can help the SMBs, or to that point, are the fintechs more focused on the whale hunting, helping General Motors onboard their thousands of vendors? Which end of that spectrum do you think fintechs can and are doing a better job of?
Well, the beautiful thing, especially Silicon Valley in New York, is that there's no lack of fintechs.
Yes,
right.
True.
So someone is addressing all of those areas, but yeah, to address, going in and fixing something for General Motors or for Oracle, you're looking at a 2-year sales cycle.
Yeah.
Right. So SMB is more like consumer, right? You can go and get quick wins there, do acquisition through AdWords, Facebook ads, that kind of stuff. And for certain businesses that works, for others it doesn't. The real opportunity in the SMB world, or is that there's been such a lack of services for SMBs for so long, right? Even from banks, right? And banks see this now all the time, that the SMB offering on an online banking portal is your consumer offering called small business, right? And there's no difference in it. And so it doesn't really take into account the processes that a business has.
Yeah, that's fair. I know I was at a startup called OboPay, and we took investment from Citibank, and we took their $8 million check to Citibank to open a small business account, and they wouldn't let us because they couldn't identify the source of funds and how we did it. And we're like, it came from you. We just want to open an account with you. And I'm not trying to pick on Citi. I think the same is true with most large financial institutions. So I definitely see that.
And because there wasn't an account open yet.
Because you have to have an open account to wire in. You have to go into the bank and do all the KYC, AML, right? And during the pre-interview, we were talking a little bit about compliance, regulations. What do you think when you look at a fintech and you look at a big bank? Are big banks really held back by compliance requirements, or is that just an excuse not to update things? Because I don't see the same constraints with fintechs.
Well, I think, to your point, a little bit leading there is, banks think that they're more constrained than they are. And, there's, in the classic business drivers, right? Fear and greed, right? And banks live by fear, right? Because they have a great business. It's a fantastic business, makes a ton of money, right? And the only thing that they can do is mess it up, right? So you have to overcome that fear that you could somehow mess up this cash cow, right? And that you're providing more value at low risk, and it's a chance worth taking. Because the default behavior out of financial institutions, and the bigger the financial institution, the faster you get to the no answer, right? Because any change is bad, right? Because it means that something that I don't know could happen.
Yeah. At Citibank, we called that reputational risk. That was the default when they didn't want to do something. So in 2013-14, I think we saw the rise of the attack of the fintechs. They're going to displace legacy players. Banks are dead in 5 years. Didn't work out. So 2016, we hear cooperation between fintechs and legacy banks. What are you finding on the ground, going day to day, trying to engage with banks, knowing other fintechs, working with the ecosystem? What's the real story? Have banks gotten better?
Well, banks have gotten better, right? They, couldn't have
gotten worse.
Right. 5-10 years ago, you had to go to small little, back of nowhere banks in order to find a partner, right? You had to go into backwaters, someone that was really looking to grow beyond giving loans to the farmers within 50 square miles of the bank. So now you have B of A, you have Wells, you have Citi creating innovation groups to varying levels of success in that. But at least now the seed is planted, right? And banks realize that there is this threat, right? That if I don't do a better job providing mortgages, that SoFi is going to come in and steal a lion's share of my mortgage revenue, right? So I can't let that happen. I have to do something. Either innovate, banks are not known for innovation, or I partner, right? And start getting into more of an enterprise type mentality of, maybe I'll work with some smaller companies, maybe at some point I'll buy them to bring that all in-house. Trying to develop, a skunk works is really, really hard, and there are very few banks that, have a true kind of skunk works where they can get a project going all by themselves. So I think collaboration is the only way forward for them.
Okay. Now, you touched on it a little bit, but build out on, and I've been part of the venture group at First Data, and I was part of the venture/innovation group at Citibank. Do you think banks that have that are better at engaging fintechs? No different, or actually worse? Because in fairness, they're not connected to the business unit, and ultimately everything that a fintech does needs to touch a business unit to get access to customers, whether it's a business customer or consumer.
Right, and every organization is different, right? And every bank is different. So it's a matter, like every business anywhere, do you get management buy-in, right? Do you get senior executive buy-in on this is the new way that we're going to do business, right? And so there are some banks out there that pay lip service to innovation because they feel that from a PR perspective they need to. Sure. And there are some that really grasp it as a core differentiator that's going to lead them into the next century and beyond. Is this innovation around FinTech and what can we do and can we experiment and not having the fear of failure, right? And grabbing on and saying, we can always fall back and make things better, but let's try. Let's try doing some new things.
Well, so based on that, so if you think of the other dichotomy, which is banks, legacy banks, versus the other ecosystem players like a First Data, like an FIS, I know you deal with both. Yeah. Do you find one of those better than the other? Are banks, because they're larger or more diverse, more difficult? Or are they about the same? Legacy players are just large, slow-moving entities?
They're different, right? So, but this has been a shift that has been going since.
Is it one's a turtle, one's a snail?
Yeah, pretty much. Banks have, since about 1980, essentially outsourced almost everything that a bank did prior to 1980. Right now, banks, hold a charter to hold money, right? And all they, except for the big four, they get their technology from somewhere else. They do their underwriting through some other service provider, right? When you get a mortgage, the assessor that comes out to your home is no longer an employee of the bank. It's a third party. So all of those services, all of that technology development has been outsourced. So, yeah, sometimes you get into a bank and they have the right mindset, but they don't own the resource anymore. Right, they've outsourced that core competency to another provider. So even if they would want to do business, they don't have the capability of doing it. So sometimes you're forced through a particular channel just because of who has the technology, who has that core competency. But in, the couple that you brought up, I think the Fiservs, the FIS, right? They're serving 10,000 different financial institutions. Yeah. So. In one sense, they're nice thing is they're motivated to drive more product through these clients, through that channel that they already have, but they're also fearful of messing up 10,000 clients. So yeah,
that's fair.
Great place to be, but you have to find the right business line owner, just like everywhere.
Speaking of which, so when I was at Citi, I know credit cards. Our credit card group was cooperative with other credit card groups in Bank of America and other banks, but they competed with our debit card group. And so you have this silo effect in banks that's really interesting and very counterintuitive as well as counterproductive. Do you find that on the business side of the bank as well as on the consumer side of the bank?
Again, every bank is different, right? So, we worked with banks that are really collaborative, amongst that, although examples where you get a bank that within the business banking, they're collaborative across branches and across digital, and all, except they're competing against the consumer business, right? So you get the business side versus the consumer side, and they're kind of butting heads. And at the end of the day, they're all living off of the same core. So you have different drivers, and it depends on, is the bank more oriented towards consumer business or towards business?
So let's make a shift a little bit to the technology, digitization of banking. I was having a conversation. We had a large UK bank in our office at Capgemini the other day, and they didn't quite air quote digitization, but they weren't quite at the forefront of it either, right?
And they weren't able to pronounce the word.
Yes, exactly, which neither can I, so I will hardly begrudge them. But what was interesting was you realize, and we're all, I presume, in Silicon Valley, we're a little bit of in a bubble, in a way, hearing our own terms constantly. As you look at technology, and for B2B services specifically, I made a note that as we meet with banks, these are the main ones that they talk about and prioritize. And I'd love to hear your rank order prioritization on blockchain, API, machine learning, big data analytics, and authentication identity. How would you rank order those? I'm giving you the rank order from a major bank.
Yeah, I think, from a bank perspective, right, blockchain is huge right now. It wasn't 2 years ago. Now everyone has a blockchain initiative going on. And most of them don't actually know what that means, but they're saying blockchain because they have to.
Yeah, they're buzzword compliant.
Yeah, absolutely, absolutely. But others are getting in, and there are a few consortiums around that. I mean, R3 right now is a little bit tenuous. A couple of players are pulling out of that, so we'll see where that goes. But you get, and this is where some the more mature fintechs, where you get like Ripple coming in and helping banks to understand, right, what the cryptocurrencies technologies could provide for them, and what layer of the stack that's useful. But blockchain is really a huge one, and big data.
Big data.
Big data is huge, and deep learning. No one knows what deep learning is.
Yeah.
Yeah. And
so deep, no one knows. Fair.
Yeah, and my master's degree was in artificial intelligence, and I don't know what deep learning is either. So I can't really begrudge them that.
That's fair. That's fair. Now, when you look at B2B and you think, there's a spectrum there, and I think a lot of us who have even been in B2B spaces before kind of wave a wand over B2B. But do you think there's subsegments to that?
Well, I think there's definitely subsegments to B2B, and there's subsegments to fintech, right, in which we haven't even touched on at all yet. Right? Is just fintech is such a large overarching umbrella. You're starting to see some things break out, which is nice. InsurTech, RegTech. You've had payments already. You see mobile payments, but even within just what's left in fintech, right? You have more payments type stuff. You have banking tech, you have personal finance management, you have investment technology, and all this just kind of gets glommed into this thing that's called fintech. And then you slice that one way for consumer and slice it a different way for business, because businesses are looking at their cash flow, right? And is that just a supply chain tool, or is that a fintech thing? Well, depends on who's looking at the screen. If it's the CFO, then it's a fintech.
That's a good point. So if you were to say, and anyone who's looked at the data knows, checks are still a big factor in business banking, right, in B2B. And I think the last thing I read, it's still 50% of B2B payments in the U.S. are done by check, maybe even a little higher. Certainly on the downward swing, but not going anywhere soon. How much do you think checks are a factor in the way B2B payments are made?
Checks are king in B2B.
So.
Yeah, I mean, and actually, the age of fintech, right? 2013 to 2016, check use in B2B payments is up. Right, it's been on a downward trend in 2004 to 2013, and then it ticked up, right? Yeah. And, well, there's a few really good reasons around it, and that it comes down to what are the alternatives, right? So checks have a 2,000-year head start on everything else, right? Been around forever. They're familiar. Everyone has processes built around that. Payment vehicles never go away. So even if you move off of checks, you still have to support it for the 0.1% of your transactions that are still going to be done that way. So you still have all that back office process. And there are some disadvantages out there in the world for the other technologies, especially when you break down different types of B2B payments, right? So if you look at some things that are more commerce, that a business is just going into Office Depot or buying from Amazon, right? That's technically a B2B purchase, but it's a purchase, right? If someone comes to build a wall or shipping you 50,000 widgets from China, and then you're paying an invoice afterwards, it's a completely different world, right? And so when you're addressing those types of invoice payments, that's what I call kind of true B2B, right? And that,
so in my parlance, I would call that supply chain. If it's a product or a piece that I bring in, do something, and sell out, that's supply chain to me. Is that what you're talking about with these kind of payments?
Oh, well, it's supply chain, but it's also service providers.
Okay.
Right, so I bring in a consultant, right? You're not handing over your Visa card to them
Right.
to, write you an analyst report.
Right.
Right? They go off, they do a bunch of research, deliver this report, deliver you an invoice, and you're paying that later, right? So, all of those types of payments, they don't meet the value proposition that things like cards were invented for.
Right.
Cards came about to bring in more people into your store to buy more goods and spend more at the cash register, right? It's been shown over and over again, and that's how the card networks justify the 3% fee that they're charging to the merchant, right? It's a growing market. If someone's coming in to paint your walls, the job's already done, right? Work's already done. I'm not gaining any more work by accepting a Visa card at that point. I'm just losing 3%. Right, so that's why a lot of those vendors will turn down those expensive
Couldn't
payment
you
mechanisms.
argue, if I'm the wall painter is a good example, that time value of money and getting paid instantly by, for those of you who haven't followed this, there's a thing called a P card. It's a purchase card. It's basically a credit card for a business, and you can limit where it's used. And I know the numbers have increased. It's still a fraction of a fraction compared to checks and other methods like ACH, but they do have controls over them, electronic controls, that might make them more appealing. And as the vendor, I get paid sooner. Is that a benefit? Is it worth 3%? I don't know, but is that a benefit?
Well, getting paid sooner, kind of depends, right? I mean, you're still looking at, a 3-day settlement on most cards, right? If you're lucky.
Right.
If you're going, over cross-border, you're looking at long settlement periods. But, for instance, if someone comes in, a check, right? If I deposit a check today, my bank has to give me up to $200 today, by law. Up to $500 by tomorrow, by law. So the fact that, I'm dealing with this older payment mechanism, right? If I'm only charging you $400 to paint your walls, I'm getting paid tomorrow.
Okay.
Right. So, there are different advantages to each mechanism, right? The cost controls that you have on the P cards is nice when you want to kind of distribute that payment authority across a wide network.
Right.
But most businesses don't operate that way, right? They have a command and control when the money is flowing out of the organization.
Have you, in your business, obviously the name of your company, SnapCheck, makes you think, have you looked at the cost of physical check versus digital? Just what kind of numbers are we talking?
Oh, yeah. So physical checks, and this is where in consumer world we forget, that we're ordering checks, that we're putting them in envelopes, that we're mailing them. The time that it takes for us to do that, to go and find all of these, our checkbook. So in a business, you understand this, intrinsically, right? Because it is your lifeblood. So, checks, what is it? Goldman Sachs puts the cost at $8.50 per check.
$8.50 to write a check and send it.
Right, and to monitor, right? Because you have to monitor these payments, right? And then reissue. So, you have to watch all of that. And so you're dealing with large processes to support this mechanism. And that's Goldman's number. Bank of America puts it between $4 and $20 per check. Scotiabank puts it at $17 per check.
So it's a lot.
It's a lot.
I have a question. Didn't England banks do away with checks?
No. As a matter of fact, England just passed their equivalent of Check 21, which Check 21 is that banks can clear all of their checks electronically, digitally now, instead of before 2004, banks had to physically fly checks to one of 45 clearing centers around the country, exchange them between Bank of America and Wells Fargo in order to clear and settle checks. So Check 21 allowed for the digitization of checks, so that's what brought about your mobile capture. You can take a picture, and now the bank can clear that without needing the physical piece of paper. And UK just passed their equivalent of that last year. In 2017, in fall of 2017 is when it's supposed to be fully implemented. And that's so you can get inter-bank clearing of checks digitally, right? So checks around in many countries have disappeared from the consumer landscape, but they exist full force in the business landscape.
Interesting. So with that, the digitization, I was thinking about this, and I know SAP, Oracle, they do, large corporates have been doing these large implementations on these paperless systems, and yet, here we are with checks, and these SAP, Oracle systems started 15, 20 years ago, and it seems like they haven't decreased paper at all. I mean, is that a fact? Are we still like somebody does an Oracle report and a bunch of checks come out the other end?
Yeah, as a matter of fact, the study that we were talking about with 51% still being checks is the Association of Financial Professionals study, which looks at corporates.
Right, I know.
Right,
them,
so those are your large companies.
Yeah.
Right, the studies that look at small, mid-sized businesses put it up at 90%.
Wow.
So you're anywhere in the 50 to 90% range. But the Oracles, SAPs, they've addressed the technology issue, but not the human factor, right? And I always like to address, bring this to the forefront this way: is who right now wants to give me their bank account information?
Yeah. You seem like a nice guy, but I don't.
Why not, right? And this is a big hang-up, right? And Oracle, GM may have all the power in the world, but at some point they're dealing with small businesses that are afraid of exposing themselves to additional risk.
So does that prevent like me getting payments by ACH because I can't get that bank account, bank transfer, ABA number?
Right. So for ACH, for wires, right, you need both bank account numbers, right? So you could flip it over, especially in ACH, and say, okay, well, I'll give mine to you, and you just pull funds out of mine, or I'll push them to you. But then there's different risk that gets associated with essentially cancellations, chargebacks on those transactions. So now someone else is opening themselves up to 60 days worth of cash flow risk that may suddenly disappear.
Now, I know PayPal's on the consumer side. Why is there not a PayPal for B2B? Or why hasn't there been? Is it just too hard?
Oh, well, PayPal provides services for businesses, right? You can, a business can pay another business.
My PayPal account has been hacked 4 times. I'm not giving them my business. I'm just saying, why isn't there not an equivalent?
Well, because it essentially runs into the same problems that you've mentioned, and that we're talking about around ACH, right? You still need a payment network where everyone joins in first, right?
Okay.
Or you need to expose account information, right? So exposing account information is hard. Getting everyone in the world to join into the same network is really, really hard. And so when you don't have that, then you're still stuck with, now I have yet another payment mechanism, and now instead of doing it 3 ways, now I'm doing it 4 ways or 5 ways, and I'm just adding to my burden.
Got it.
Right? So,
Is it not because of the fees as well?
right. So, a PayPal, a person-to-person PayPal is free, right? And then they make money off of the purchase side of things by having merchant accounts, right? So, and they don't make that dichotomy between a purchase and a B2B payment, right? So if I'm buying a widget from you, you're happy to pay 3%. If you've painted my walls and you're losing 3%, you're not so happy, right?
Well,
But they
yeah,
don't
that's
break
on
that
PayPal's rules. But I mean, is there not a place in the world for a B2B PayPal network? But I think your point is valid, which is now it's just another way to pay. And I've got to get a bunch of people onto this new network and this new method. And it's not that there wouldn't be issues with that.
Not that there wouldn't be issues, but someone in this room might be building such a network. So
Fair.
Things are coming about, right? And as businesses understand their needs more, and people take a pragmatic approach instead of a build it and they will come approach, I think there's more opportunity to move businesses over that digital divide.
Okay. Well, at this point, what I'd like to do is open it up to any questions that anyone has and find out. And we've touched on a lot here, I realize. But I think the question you asked earlier about, the small business versus the mid versus the large, I do think there are different issues there. And I know there's a business I've talked to recently called TradeShift that is trying to onboard all of the vendors that a large organization has. That's one way to approach the problem. So General Motors is one of their clients, and General Motors has thousands of vendors around the world, and they're trying to get them all onboarded. To your point, it's another network, it's another way to pay, right. There's a cataloging issue. And as I started to look at their business, I realized the complexity at the high end. Mm-hmm. As I look at the low end, the SMBs, you have working capital issues you're trying to work with. And then, of course, and we didn't touch on this, is the data flow, right? The Oracle SAP data flow versus the QuickBooks or the Xero data flow versus, somebody who runs their business off, literally their checkbook and some spreadsheets, right?
Right.
And so that whole spectrum covers all of it, and it's probably hard to address all of that.
It is, yeah. It's hard to address all of that, and that's where you take off bite-sized pieces, right? And what can you change now and move the football forward, get it down towards the goal line? Trying to throw a Hail Mary and get that whole thing all at once, it's just not going to happen, especially when you're dealing with then a heavily regulated industry, trying to cooperate with multiple banks at the same time. Changes in regulatory environment, right? The emergence of the CFPB now, and new rules that they may be bringing out every few months. So, trying to make a huge change with all these other forces around it is really hard. And then, you're dealing with human factors, right? And most people are pretty content with their life the way that it is.
Yeah.
And
if it works, it works.
Changing things is not necessarily helping someone. So you have to show that you are.
Fair enough. Are there any other questions around?
In marketing to businesses, you're talking about FinTech versus legacy. As part of the problem, identifying when is FinTech and when is legacy. In other words, most companies have online some functions whatsoever. We market in the collection space, AI, to solve collections, but we are a closet FinTech. We don't want that word coming out when we're talking to our particular type of customers once in a while.
That's interesting. We were having a debate at the office the other day at Capgemini about what is a fintech? Is it a verb? Is it a noun? I mean, we couldn't even decide what type of word it was, let alone what it was. And I do think in the early stages of a market, you do get misidentification of the category and the players in the category and what they're trying to achieve. So I think that's fair. Where we ended up was the reason banks and global FIs are not fintechs is the lack of innovation. I think that's what differentiates a fintech. A fintech is somebody who's innovating in the financial services area. Now, if that's technology driven or process or business model driven, a lot of the fintechs we see and work with and that I've invested in the past are more about fixing the process or the business model or the pricing than it is the underlying, it's a blockchain or an AI or that type of thing. A lot of the innovations you see really aren't that advanced of technology.
Yeah, and I think your question, when you're marketing, you don't market what you are. You market the problem that someone has and the solution that you have for them. So whether that's consumer or business, say, hey, you have a problem where your cost for X is $100 million and we can bring it down to $50 million. Is that an important value proposition to you? However we do it, at the end of the day, you don't care, right? Just lower my cost or increase my revenue.
It seems like the phone issue, long distance phone calling was a big deal. People going in and auditing and then taking 25% of whatever they saved. That seemed like an interesting model. I wonder if that would work within the businesses where you go and you give the auditing, you say, look, whatever I save you, I want a piece of that.
Yeah, basically we save you X and we take % of that.
Because then you put up the upfront work and show them, because you're dealing with enterprises in the bank, as you said and mentioned, and partnerships are deeply entrenched, so you're going to have to disrupt, for one. And number two, maybe they have some stuff projects there, but they're mostly entrenched.
Yeah, the reason banks push back on that is banks' greatest fear is to become a phone company, because a phone company is a big dumb pipe.
Yeah.
It's absolutely what banks don't want to be. They don't want to be just, oh yeah, you can transact with us. Doesn't matter what the front end is, whatever skin you put on this. I mean, this was, when I was at Citibank, there was debate about, Yodlee screen scrapes your information by giving them the password, and then they put that into whatever, Intuit or something online. And we debated preventing that because we realized if you get your information from Intuit, you're not going to value your brand relationship with Citibank. And then we realized we're just going to end up as this back-end commodity provider. And that's a really dangerous place for banks to be because their expenses and their margins don't allow for that yet. And their greatest fear is to become a phone company.
Is that where they're going?
Probably.
Yeah,
I didn't
but-
say they weren't. I just said it's their greatest fear.
At what point does it become exposed, and then it becomes a value proposition issue? They're going to compete on service.
It's a great question.
Well, but the saving grace for banks is that they have all the money, right? So someone's going to have to drag them kicking and screaming down that path of becoming a pipe because they own the customer relationship, they own the money, they own the data, right? So unless, right, Citi allows Yodlee to go in and scrape, Yodlee's not going to do it, right? Because Citi's got more money than God and can sue them, to oblivion.
So you'd have to target a bank that would allow it. And show
Yeah, well, but the revenue or the pricing strategy that you're suggesting, is definitely out there, right? Different companies are utilizing that, but it depends on what type of business you're providing, right? So the one thing that does though is it would force me as a provider to the bank to then go out and market and drive that adoption of the new service,
That's what I mean.
right? Well, yeah, great, but do I have $100 million to go out to?
I've seen some huge.
Well, so
Wow.
actually, though, you bring up a good point, which is one of the things what Capgemini realized is when fintechs come to us and say, "You have these giant bank clients. We want to connect. We want to get deals with them." What they say is, "We need access to their customers. We'll never get those kind of customers because our CAC, our customer acquisition cost, would prevent our model from ever taking off." Well, the banks already have those client relationships, whether they be business or consumer, right?
That's like eBay. We were talking about that earlier before.
Yeah.
Peter Thiel came in and he got a new opportunity there within a merchandising site, and he was able to get all the CAC.
By the way, everyone in the Valley and fintechs will say, "What's our eBay?" A lot of fintechs will say, "What's our eBay?" Pure luck, by the way. You read his book, I'm sure. It was pure luck that PayPal found eBay as a perfect match for their model. And by the way, PayPal almost went bankrupt 5-6 times in those first few years. They were closed down by regulators 2 to 3 times, right? So a lot of people, it's easy to forget that or sweep that under the rug. The fact is, launching a fintech in today's environment is not easy. You need the bank for the license, the scale, the reach, and the customer access at a customer acquisition cost that is not prohibitive to your model. Now, one thing I'll tell you as someone who's invested in fintechs and works with fintechs on a regular basis, the ones you see today, there's going to be a culling of the herd.
Yeah.
It's coming soon. They're going to merge, they're going to fail, they're going to get acquired. And a lot of the ones I talk to are hoping for the acquisition because that's the most graceful exit out of a model that doesn't work. Now, I'm not against that per se, because the bank or the other company that acquires that gets a technology that they likely wouldn't have developed on their own. It's what I call outsourced R&D, right? That's the VCs can just be like, we just spent $1 billion, you got $100 million of value for $30 million. It's fantastic, right? And so on and so forth, right? So that activity is ongoing.
So it's interesting what you said, just to follow up on that. It brings up the importance of regulation. That's really what it tells me.
So there was an election recently I read about. I'm not positive which way it went, but it seems like our current administration is going to take a very different approach. We don't know what or how, so that regulatory question, super valid, it could go either way. It could be all the gloves off, knock yourselves out, do as you may. Or it could be a bunch of fines. We don't actually know what the net is going to be of the regulatory bodies. I mean, there's talk of eliminating regulatory bodies that were just created in the last decade. So how that plays out could change the playing field for everybody, banks and fintechs both. So it could be really interesting in the next 5 years.
What do you think the most promising applications for blockchain?
So I actually, I worked all summer on that, and I believe it's supply chain finance. And the reason I believe that is because if you look at supply chain finance and the number of parties that have to touch a transaction that don't know each other or trust each other, there's a great opportunity for opening that up by using and one of the great benefits of the blockchain is the immutable audit trail, meaning I touch a transaction, forever it's known I touched the transaction in that way. And I worked on a pilot with a couple banks. It's public, so I can mention it. Wells Fargo and Commonwealth Bank of Australia, CBA, put a IoT sensor in a bale of cotton, shipped it from Australia to China. It arrived. The sensor sent a signal that said, I've arrived in Shenzhen. I've had below 10% humidity, so I'm not spoiled. Release payment. Now, at first you think, wow, that's kind of cool, but here's the cool part. I was talking to Maersk Lines, the big shipping company. You see their ships out in the Oakland port. Well, they built $1 billion ship that they can't unload fast enough for inspectors to check shipments. Now, if you imagine, flash forward, everything has a sensor, no inspector needed. It releases payment by a signal into the cloud that says shipments arrived, quantity is correct, quality is correct, release payment. Nobody had to rubber stamp a piece of paper, which, by the way, I've worked in supply chain finance and trade finance. Hundreds of documents are associated with these shipments. They're literally carried by ship captains in an envelope and delivered to the dock. You get rid of that and use the immutable audit trail of a blockchain that all parties trust and access. Now suddenly you've made a really big change in what is trillions of dollars of trade across the board. That's my personal favorite.
Is it
All right.
expensive to build that kind of?
It is and it isn't. The technology, as always, as Ken well made the point, it's not the technology, it's those darn humans. Boy, if we could get rid of them, would be fantastic.
The world
When
would
the
be a
human
fabulous
overlords
place.
take over, we'll be great. Yeah, the humans screw it all up. Because, and you think checks are old, the trade finance process is ancient. I mean, and I'm not exaggerating, it's literally ancient. You know, they used to be scrolls, a little scrolled piece of paper that would be shipped on a sailing ship many, many years ago. And then a stamp would be accepted as trust. And then you would release payment and you'd get your little bag of coins. We've only advanced that much from there. And so now you've got an opportunity through this technology as an enabler if people sign up, if people get on board with it. And it takes a lot of cooperation.
Yeah. So, I mean, I really like that example because most of that is dealing with, well, IoT, and then it's really the smart contract on the
Exactly right.
blockchain, right? So the payment part is kind of like, you know, this redheaded stepchild that no one actually cares about, and it's actually not germane to that use case, right? You know,
Yeah.
you could make the payment any of
It's an
a million
electronic
different
payment.
ways,
You're absolutely right.
where I think blockchain is relevant within the payment cycle is disintermediating corresponding banks, right? So international and, you know, well, it's, you know, how banks move money between themselves.
Yeah.
Right now is, you know, there are 5 large correspondent banks around the world, right? And every credit union, small little community bank has to plug into one of these 5 in order to send a wire from, you know, Northwest Iowa to Shanghai, right? Well, what if they didn't have to, right? Completely levels that playing field on the financial services that you can provide at a really core layer in the stack.
That's a really good point, and it points out the value of blockchain to me is parties that don't know or trust each other. It is a way to insert trust into an untrusted transaction or relationship, and that's really the power of it. And that's why, to Ken's point, you'll see over the next decade this core layer of banking is going to be inserted there. And my prediction is 5 years from now, you won't hear the term blockchain any more than when you use the internet, you say TCP/IP. Hey, TCP/IP me that file. What? You would never say that, right? I believe blockchain will become transparent to our transactions, but it will be the underlying technology.
Right, and you're seeing that in the UK, right, where they took a private blockchain. The central bank in the UK is, experimenting with, why run it through our database if you're doing, settlement between UK banks? Let's just try a pilot here on this blockchain type thing and see how that goes. I think, the stuff is really positive coming out of those trials right now, and I'm sure we'll see it expanded. Blockchain right now has some problems with the scalability.
Yeah.
All right. So once that technology gets fixed, then you'll see it expand. I mean, and really, right, all the Bitcoin in the world is what, about $10 billion right now. So it's a drop in the bucket, right? It doesn't really matter except for the potential that it has.
Right. And one of the reasons supply chain is a good example of that is because you don't need trillions of transactions per minute or whatever whatever Visa or MasterCard does. It's not to that speed and scale yet. To Ken's point, it'll get there, and we'll have to develop systems that enable that.
Yeah. Well, and Visa, just at Money 2020, Visa and who was that?
Chain.
Chain.
Chain.com.
Yeah, just announced a pilot around running, purchase transactions over that. So we'll see if they can get to the scale, right?
Yeah.
Because you're talking
I
billions of transactions a second.
It's amazing.
On a global note, who's innovating country-wise, would you say, kind of faster than others? Like, is Europe innovating quicker and then waiting on the United States, or is the United
Good.
States?
We're the laggard in money. We are the third world of money movement, honestly. And I am being literal. I mean, like South Africa probably has some more modern stuff than we do. I mean, mobile payments in Kenya, M-Pesa, a mobile payment system in Kenya, moves, I think it's up to 20% of the GDP of Kenya.
33.
On mobile, how much?
33.
33 now. Wow, good update. 33, what are you, the Rain Man of M-Pesa? 33% of the...
That was my world in the last company.
I know, that's true. Oh yeah, I forgot. So a third of their economy moves over mobile phones. And by the way, these aren't smartphones. These are, you wait in line at a Safaricom store, get a chip, put it in your phone, update it, you get this little app with texting, and they're moving a third of their economy that way. So to that point, and there's a reason for this. The reason is when you have great systems for money like we do, why change them? They're not busted, why fix them? Now, the country that I'll name one that I'm really excited about, Singapore. And the reason is Singapore is one of those great countries, very digital, very highly educated workforce, very controlled economy, government very active in business in a positive way. And the final piece is their regulators are super cool. I saw the guy speak, and he spoke at an event, and he says, hey, if you're in Singapore and you want to have a beer on a Friday, come by. I'm like, what? Did a regulator just invite me to a beer bash? Jesus. And then he says, I'll tell you what, if you're in Singapore and you want access to banks, data, and information, you call me, we'll get it. I'm like, wait, what do you mean? He goes, if they don't have an API, we'll make them get an API. You will get access to a Singapore bank's data. And he said the reason for this is because we don't believe banks should have a ring fence around everything. We believe it should be an open environment, and we're the regulator, and we'll tell you that. So I'm like, if that's a regulatory environment, wow.
Yeah.
At its finest, it's controlled capitalism, right?
And within, two other places that come to mind that I've read about recently are Luxembourg and Dubai. And
Dubai.
Is the fund management business. The government has said that they wanted to be fintech innovator, to support that whole system. So they have a whole bunch of government entities that help foster startups and give them offices, give them mentors, and so on and so forth. And then in Dubai, I think the government there has said that they're going to have all government payments on blockchain by 2020.
Yeah.
They've said that as a strategic goal.
So you were saying that the reason why it's not happening so fast here is because the system isn't broke. But I follow a lot of the fintech publications, and I see even in Australia,
Yes.
I've been gone a long time, but they seem to be more ahead. The government's totally on board. And why is that? Because it's the same system there as we've got here.
No, so one of the big factors that drives this, I love Australia, Canada, and Singapore as small enough to manage, big enough to matter. Small enough to manage, big enough to matter. Canada, Singapore, and Australia. The other thing is, They're very westernized. English is a base language. And that is very helpful to getting these things done because a lot of technology comes out of the very area we're sitting in. So the first documentation on most tech is in English, so that helps. Now, what's interesting about that is Australia took a very proactive view on credit card rates. They forced the credit card companies to leave millions, maybe even billions of dollars on the table by forcing a rate and protecting their consumers. Canada did the same on debit. Right? So you've got, and I'm sure Kuwait's the same, you've got a very active government, proactive towards consumers, forcing the companies to play by a certain set of rules. But it's not regulatory in the sense of just giving them a bunch of rules, it's actually driving a consumer change and a different way of paying, right?
And so what do you see then as the differences here? Why is it slow here?
Well, a couple things, right? So let's jump back to Kenya, right?
Yeah.
So,
Yeah.
right. First, right, you had the perfect storm there. It was brought in by the dominant telco, right? It had 95% market share, right? They pumped billions of dollars. They walked hut to hut, shop to shop for 5 years before anyone even knew what the name M-Pesa was, right? So it was an overnight success after 7 years.
Yeah.
Right. And, oh, by the way, all of those transactions technically are not legal because they go against regulation. So when you have a central bank that looks the other way on things that are, against regulation, and you have a dominant force that comes in with infinite money to drive change,
in a small market.
In a small market, eventually it happens.
And in a small market where a transfer of money was done on a bus. You literally put money in an envelope, put it on a bus to send to your relatives in another town, and you could get killed for that money. So I'd call that a sense of urgency that we might not have with our credit cards yet.
Right. So one of the major limiting factors here in the U.S. Let's remember, right? We are a collection of 50 states.
Great point.
We are not a united country, right? We cooperate sometimes together, right? I mean, if Michigan and Ohio could, they probably still would have border wars, right? Yeah. So, there's a lot of times when regulators in different states take drastically different views. And, it either stops you from doing business in half of the country or forces you to drastically scale back how you're doing your business.
That's a really good point. When I was at OboPay, we had to spend between $200,000 and $400,000 per state to get what's called an MTL, a money transmitter license. And to Ken's point, they're unique in every single state. And the requirements are unique in every single state. I mean, Arizona can't even have one time zone, for God's sake, right? So what are the odds that they're going to cooperate on moving money from Ohio to Arizona, right? So
yeah,
definitely
and
a really good
and then try to take it from Arizona down to Mexico. Oh my gosh.
Yeah, forget it. That's radical. Yeah.
Gosh, it's hardly ever that I don't want to stop a conversation. This has been like totally fabulous. Thank you so much, both of you, and thank you everyone for coming along tonight. I'm really sorry we're going to have to stop now, but there's a little bit of time for networking if you want to catch up.
Great.
Thanks again.
Thank you.
Thank you.
Cheers.